Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Bill Zahller. Thanks for being on the show, Bill.
Great. Hey, thanks for having me, Whitney. Appreciate it.
Bill is the president of Park Capital Properties and resides in Asheville, North Carolina. As a multifamily real estate investor and syndicator, he founded Park Capital Properties in 2016 after 14 years of involvement in the real estate investments. Bill has been flying professionally for over 25 years. He has accumulated over 12,000 flight hours and 7 jet type ratings. Bill is also the founder of the Asheville Multifamily Investor Club. So Bill, give the listeners a little more about your background and how you got into this business we call syndication.
Yeah, absolutely, Whitney. I've been involved in real estate probably for, like you said, a little over 14, 15 years. Started in a single family, seems like most everybody does. Did quite a few of the rentals, just kind of held long-term with those. And then, as everybody I think comes to the conclusion that's in it long enough, you realize there's an issue with scaling single family homes. So kind of transitioned over to commercial, did some, started with an office condo building, and then got into the apartments. And like I said, it just mathematically it worked out. I knew where we wanted to be, and as a scalable full-time business, it made more sense.
So you were doing single family, and I hear it a lot where people are fearful of making that jump from the single family and saying, I can never purchase a 50 unit deal or 100 unit. That just seems so far out there to them. How did you get over that hurdle from, of that fear, or did you have that fear at all from making that jump?
I think everybody does initially, right? And it's kind of just the fear of the unknown. Everybody understands a single family house because you probably own one, you live in one, you've been through the transaction, you know how it works. So the unknown is scary for most people. But I spent a lot of time, studying on it for, do a lot of reading, podcasts, seminars, been to, and everything I could to learn everything I could on the multifamily side of it. And then also I got a mentor several years back to go give the idea of further, faster, big believer in that. And that's really helped accelerate our path. But as your mind, and the more we looked at these, the more comfortable we got with them, the more brokers we talked to, the more deals we went and toured and we underwrote, the more and more comfortable you become with it. And at some point, our first deal was over 200 units. I mean, so there wasn't, you had to do a 4-plex, a 12-plex, a 30. We understood we understood how the basics work on it. Had good confidence in our numbers, our underwriting, our plan. And so we had, in as far as advice from, the mentor I have and some other local people we have with lots of experience in the market also, definitely helped for the confidence to just, finally push through and get that closed.
Nice. So I get the question a lot about finding that mentor, and tell me about maybe some due diligence somebody might, so that they should think about in doing before they hire that mentor, pay all that money, or even maybe finding somebody local that they don't have to pay a lot of money to. But what were things you thought of, or maybe things you wish you had thought of, in finding that mentor?
Yeah, absolutely. That's a great question, because I went through I had a list of several people, and some of them are fairly familiar names. And for one reason or another, I kind of checked them off as I was going down the list. Some hadn't. They were decent sized apartment owners, but they hadn't really done syndication. Other ones were specialized in just one geographical market. And the one I ended up going with was, I think, very important. He was currently actively doing it at a high level. So it wasn't somebody that had done it, 20 years ago, and this is how it used to work. Currently in the business, currently has the contacts, and just has a good feel for it. Like I said, they're closing on large deals every quarter. So, I mean, they're very active, and so great current knowledge, which gives you a lot of confidence in what they say. And I know a lot of his other students, that he has helped have done, phenomenally well also. So it's a good indication, I think.
Yeah. That's a great point. Go ahead.
I was going to say that Tony Robbins quote, success leaves clues. So, you don't have to reinvent the wheel as you're trying to implement this program. it's a great framework for it. And, you just need to do your part, but you don't have to start from zero.
Great. So let's talk about that first deal. It's very impressive that it was over 200 units. I think most people can't say that that first apartment syndication was over 200 units. So obviously, you must have had a good coach or mentor or team and had some confidence that you could make that happen. But tell us a little about that deal, and elaborate a little bit, and we'll dive in.
Yeah, absolutely. My business partner, Richard, and I were been looking in Atlanta. We like, the Southeast, Charlotte, Greenville, South Carolina, Atlanta, Raleigh, in these areas. So we've been making trips down for months to meet the brokers, tour deals, get to know them. And as we actually were down looking at another deal that day, and we just happened to get an email like the day before on another property coming across. So we thought, well, we'll just swing by and look at it while we're in the area anyhow. And we swung by, and we happened to see, as we're driving through the property, one of the brokers we knew. And we're like, hey, I wonder if he's giving a property tour. So we kind of circled out, went to lunch, texted him, and he said, yeah, come on back. So we came back, got a tour of the property, got to talk to him, found out there was an opportunity to preempt it at a certain price, which was $58 a door. We went back, did our underwriting. We made the numbers made sense.
Can I stop you just a second?
Absolutely, yeah.
So you said preempted. So, what is that? Listeners never heard that term before. What does that mean?
Yeah, exactly. It was an on-market deal. So instead of going all the way through the competitive process, getting call for offers, and then, the next round, best and final, and you keep going through that till somebody's finally awarded the price or awarded the property. And usually sometimes the price will, of course, jack up as people are in the competitive process trying to get it at, the best and final. They tend to ratchet up, or especially in a competitive market. So we had the numbers we could stop all that. We just short circuited. If we met their numbers, they would stop the active listing of it, and we would just go to close, which we did. That's what happened. So we were able to get out of the best and final in the competitive process altogether.
Wow. No, that's great. And so you're actually looking at another deal. You were in the area. You reached out to your broker. You just happened to see him. But it's neat how those things happen, and you just got to be ready for it, don't you? And ready to act. If y'all hadn't texted him and jumped out there, it wouldn't have happened.
Absolutely. I mean, that's I try to stay in contact with them a lot, but it's the same thing. If we hadn't gone down and met them 6 months ago, this brokerage firm, and met all the brokers, and we wouldn't have recognized him. We wouldn't have known who he was, just somebody standing out there. And so, yeah, it's funny how it does work out, but the more effort you put into it, the more these things seem to work out as you go forward.
So that deal, I guess, tell us a little about the deal, or how, how many units is it?
216 units.
216 units. And then, tell us some things that happened during the process of acquiring that property. Maybe some things that you learned that we all need to know going forward.
Yeah, absolutely. We liked the property, like I said, from the beginning. We're 58 a door. We knew another property just got under contract. There was a few miles away in the same town. Slightly older, 3 years older property for $73,000 a door, unrenovated. So we knew we had a good cost entry basis for what we had. And then our neighboring property that shared a property line with us just to the east, it was renting. Their ones and twos were $200 higher per unit for renovated units, and their 3-bedroom is $450 higher per month than what the current property was getting. So on all our underwriting, even at $100 rent bump, we can come in below them. We can still offer competitive advantage for renovated units, and we still can meet all our pro forma numbers. So we like the deal. There's a lot of upside. We saw what was happening in the area, and it made sense as far as the acquisition part of it.
So what was how much capital did you have to raise for this property?
Just under $3 million, so about 2.9.
Mm-hmm. And what did you tell me about that process, raising for that first deal? What did you learn?
Yeah. And that's, it's kind of funny because it wasn't as straightforward. Everybody has in their own mind how it's going to work out. Of course you have your list of friends and families. We had between the two of us, we had a fairly extensive list of people we thought would be interested in the deal. And some of it was our initial key principle we had in the deal. This guy has a lot of experience in the area, has been doing it for quite a long time. They have probably 5,000 units. And we kind of followed, we had our initial, deal structure, and they said, no, just make it simple. And he kind of changed the breakdowns on it. And that wasn't, as we found out wasn't as enticing to investors, I'll say. It obviously works for them. They've been doing it a long time successfully, but theirs was more of a 50-50 on the back end split, where traditionally it's more like 70-30. So that was, it hit some resistance with some of the other people we had raising money for us also. But as it plays out here, we'll find out where this doesn't matter as much in a second. But we were able to, through again networking and the conferences, I was able to meet up with Neil Bawa there, which was a syndicate, raises money for syndication, and we were talking. He liked the deal. We got along well, and he has an amazing network for raising capital. So, as it turned out, the capital raise turned into one of our easiest events through his network and the webinars we put on. It went very smoothly at that point. And as soon as we solved that problem, which is where it becomes funny, as soon as we solved the equity raise problem, then our key principal backed out of the deal 14 days before closing.
Oh my goodness. We want to get into that and what happened there and how you solved that problem. But, back to on the capital raising portion, if you hadn't been networking, if you didn't have somewhat of a network, you wouldn't have made the deal happen, would you? I mean, if you didn't know Neil, if you didn't know somebody to connect you to him.
Absolutely. Yeah. And that was going to events. I try to go to a lot of real estate events like that, all over, and try to stay active. We have our own club here, and it just, always, I think two of the most important things in this business is networking, always being out there, letting people know what you do, what you're looking for, and, how you can help other people too. It's, it's a two-way street. And the other part of it, I think, is, a good business partner. I think those two things are critical in becoming successful on a large scale in this business.
Yeah, I know networking is key, and finding a good business partner is very difficult. And maybe you could speak to that before we get into that. The KP backing out, which is very interesting. I want to know how you fix that, but maybe give us a couple pointers on how to find that partner like you did. That's so. It's such a big part of your business, right? I mean, it makes or breaks most businesses. And how did you do that?
Absolutely. And that was, again, through network, our local RIA meetings here. I'd met Richard maybe 2.5 years ago at one of the meetings, and we talked and asked what he was doing. I was getting to multifamily at that time. And we kept talking, over the months. And basically you have to have, not only your personalities have to mesh, I think, to make it a successful partnership. You spend a lot of time together, a lot of time talking and all that, but you also have to have, similar work ethics. You can't have somebody that doesn't want to do much and somebody that carries all the weight. So you have to have people that, are on the same page, have the same goals. We both had the same goals as making it a, full-time career, leaving our W-2 jobs, all that in a relatively short time frame, scaling the business large. So we all had, the same path we were trying to pursue, and, get along well with each other and have similar, work ethics. So I think that's really important. And just to know the person and is, key too. Awesome. I wouldn't do it just on, somebody you met on LinkedIn or something like that if you don't have any kind of real relationship or background with them. So, so getting into the KP backing out, before you really dive in, tell, in case the listener hasn't heard of that term KP, what is that? It's key principle. And for the deals, and it'll vary necessarily why you'll need them. Sometimes it'll be an experience thing if it's your first deal or second deal possibly. And it can also be for the net worth requirement. And this particular individual brought, for the loan we had, we needed to have a minimum net worth for the partners $15 million and $750,000 liquid. And this KP brought that with us, so we had all that covered up until the day he backed out. So that left us scrambling a little bit to backfill that spot. But again, you have two choices, I guess, when something like that happens. You can either, quit and go, well, nobody can blame me. We tried, it's not fair. Or you can just push forward, so we're not of the first mindset. So we definitely just pushed forward, sat down, we thought of everybody we know. And then we narrowed it down to people we thought would be a good fit for us and our team. And we reached out to several of them, and one of them stepped forward, and we're glad to have them on board. It was a great addition to our team. It's a stronger team now for it. And it all worked out, but it took multiple calls, dozens of calls, lots of back and forth. But if you're serious about it, you'll find a way to make it work. And that's what we had to do. I mean, we had between Richard and myself, we had $200,000 hard at that point also. And it wasn't just the money, loss that would still, obviously hurt, but it's, we don't want to burn a reputation with the brokers. We promised them we could close, and we're going to find a way to close it. There's always a way. You just have to, be creative and continue to grind, and you'll find a way.
I would imagine there were some sleepless nights that happened. And you said 14 days before closing?
That's correct. Yes. Luckily, we'd always, write the contract. We always write in extensions too. We had to exercise another 15-day extension. So it basically bought us about 30 days to backfill and then finish the capital raise and all that. But it was, you're putting more money in the deal than you're at that point, you're kind of on the bubble about if it's going to close or not until you can make sure you have somebody to fill that position.
So to exercise the extension, you would have to put more money down, or more money would go hard?
That's correct. Yes. All the money was hard already. Then we just had to continue each extension. We had 2 extensions built in, and each extension was another $25,000 each. So to exercise those. Okay. But so at the end of the day, it was worth it. So.
Yeah. But I mean, I guess kind of a double-edged sword. You're afraid if you can't get it to closing, then it's more money you're going to lose.
Exactly.
Yeah.
That's exactly it. So, I mean, it's going through your mind, with all the doubts and, with 14 days out and everything just basically fell apart on you, and you've got to, still push ahead and still write checks and still get to the close. But we knew with another, not only, the money loss, the reputation with the brokers, but also, the most importantly, we knew it was a good deal. I'd underwritten it. My partner had underwritten it. The KP initially, he'd underwritten it. Our debt servicer, he underwrote it. And then I always have a professional underwriter, just check the numbers and he'll underwrite it too. So we had like 5 different people look at it. Everybody came out with it was a good deal. We liked our business plan. We knew the area. We knew the improvements. So we were confident this was the deal we needed to do. So we just, found a way to get it done.
So how do you keep this from happening going forward? What are some things maybe you've put in place, for the next few deals or, in your business going forward? How do you try to keep this from happening?
Absolutely. It's a great thing. As far as we never saw it coming because the guy was local. We'd known him for a couple of years. It was just quite a shock to us. It wasn't somebody, we just, met once, like we'd had a relationship with this individual. So it was quite a surprise to us. But how we keep it from going forward is I think now we have the right team in place. We're very confident in where we are in the Atlanta market between our property management company, people we have to raise equity for us. The KP we used on this last deal, all the team, I think it's a better, stronger team that works well together. So we have everything sorted out. It took a little time, but we have it all sorted out now. So we're anxious to, duplicate that process again, because this time it'll be much smoother, of course, because we won't have any last minute changes. So yeah, just looking for the deal that makes sense.
Yeah, things like that are just going to happen, aren't they? Also, you can't. Just like I was surprised to hear that you had known that individual for a couple of years and had that relationship. I think most people wouldn't have seen that coming.
Right. That's why it was a little bit more surprising. Like you said, you see him every CREA meeting, and and it's just kind of a shock. We weren't prepared for it, but we did recover. And like I said, it like you said, it worked out like it's supposed to, because now we have a stronger team and we're right where we need to be, and it's going to be better as we move forward.
So Bill, getting into the syndication business, what's been the hardest part of that process? Maybe just the entire syndication process for you.
Yeah, that's, I think it's what we touched on earlier, kind of the unknown, as you're pushing forward, as you're trying to there's a lot of moving pieces, to trying to put it all together. And it's just, you have the confidence from reading and people you can bounce ideas off that have done it before, but it's until you actually, go completely through the process. And I'm always big on reading and studying, and, even from my other job, we have to memorize, large flight manuals, and the rote memory is one thing, but you learn so much more after you actually close your own deal than I learned in the 2.5 years of studying prior to that. So it's, you don't know what you don't know. You can be as prepared as you can. And like you said, but things will come up, but you just have to, adapt to them on the fly. So I think probably that is just getting through your first deal is the hardest the hardest process in that. And then afterwards, you've been there before, your team's in place. The brokers know you can close, and it's definitely, it kind of builds momentum going forward from there.
So what's some way that you've recently improved your business that we can all apply to our syndication business?
I would say the focus on networking. And I guess brand awareness also. I try to do a lot on, have like a monthly blog, have the Asheville Multifamily Investor Club meet up, try to do, podcasts and different things to try to get, the name out there a little bit, but also is just the networking with, people that, are interested in my business. And I think that's the key to all of it is, it's a people business, not a real estate business we're in. So it's really the people, and the people you can help, people that help you. It's I think where it's all about.
Bill, what's the number one thing that's contributed to your success?
I think it's just the grit or determination to follow through. If you're confident and you know what you want to do, and you have the background and the experience you've learned, and I think that's it. You just got to keep pushing forward. There's gonna be a lot of setbacks. So like you said, there was a lot of sleepless nights on that deal. But it's still, in the end, it was massively worth it. And we're, absolutely glad we kept going.
Yeah. You're better prepared now for the future and for the next however many deals, aren't you?
Absolutely. I mean, that's it. I mean, that's from Ray Dalio's book, Principles. I loved his part in there, the line about, it's another one of those, at some point, nothing, shocks you. It's just, it's another one of those. We'll just deal with it. And I think that's the attitude you have to be successful, that whatever comes, just, think rationally and figure out a way to solve it. And there always is a solution. You just have to, be creative and figure it out.
So what are you excited about right now for Park Capital Properties and moving forward?
Yes. Basically scaling. We're looking at lots of different deal flow. We're definitely active in the Atlanta markets. We have a goal this year to close on 800 units for 2019. So we're actively pursuing that, and it's just scaling the business is what we're excited about. Like I said, we have everybody in place, and we're ready to go. And once we find the deals that make sense on paper, we'll go take a look and put that plan into action.
Nice. Is there what's your favorite way to give back?
Well, and of course, have local charities, our church, but then also from the real estate side of it, through the Asheville Multifamily Investor Club. Like everything we learn, Richard and I are very active in that club. We started it about 2 years ago, and we like to, anything we learn, we like to pass along to people who are trying to get started, either in the syndication side, the limited partner side of it. They want to buy a fourplex, whatever it is we can help. We try to speak at the meetings also, and we'll also bring in subject matter experts to dive deep into property management, mortgage brokers, something that, that can just help the community grow.
Nice. So, Bill, you've been a great guest. I really appreciate you being on the show, and but tell the listeners how they can learn more about Park Capital Properties and get in touch with you.
Sure, absolutely. Our website is www.parkcapitalproperties.com, or you can email me directly at bill@parkcapitalproperties.com.
Great. Thank you again, Bill. And I hope the listeners will reach out to you and connect. And I hope you all will go to LifeBridge Capital and connect with me and schedule a call, and also join the Facebook group so we can all learn from experts like Bill and grow our businesses together. And we will talk to each of you tomorrow.
Thanks, Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.